for 17 years, and that promise of democratizing share ownership has been real, tangible since 2000. And so certainly maybe not in South Africa because of the demographics and the access to the internet was poor, but certainly globally. But we haven't achieved, in fact we've achieved nothing. This is the South African, number of South Africans that own shares directly on the JSE. And when we say we want to democratize share ownership, why? Because it is the fundamental building block in a wealth portfolio. And so we have to start there. We have to start with the biggest component and the most fundamental component. 53 million South Africans, and as of at the end of 2013, when we conceptualized this business, there were only 280,000 registered stockbroking accounts. That's pathetic. That's less than 0.5% of our country's population, and it underperforms any global peer on any basis, regardless of their demographic position. So whether you look at Asia, where you've got numbers up to 90%, or Europe, where the numbers go between 20 and 40%, Australia 44%, South Africa 0.5%, it's not good. What do we do to need to change it? First thing that we did, we set some rules around the business. We needed to address affordability and not cost. And in terms of addressing affordability, we needed to abandon minimums. The old world of stockbroking has minimum trade costs of around 80 Rand. So if you're a 100 Rand investor, which is the person that we're appealing to, 80 Rand is consumed by the value chain. We would do that. Minimum investment value is around 5,000 Rand, and monthly platform fees are 50, and data fees are 75 Rand per month. It's just minimum, minimum, minimum. And if you think about the 100 Rand investor, there's no entry point or access point for him. So we abandoned minimums as a strategy. No minimums, just 65 cents per 100 Rand invested. No minimum investment amounts, no monthly platform fees, and no data fees. The other point that we have to address in terms of affordability is that share prices themselves exclude people from owning the shares that they love and that perform. Think about it. Naspers, Capitec, PSG, any of the shares that have performed particularly well become unaffordable to the masses. How did we address it? We created fractional share rights, which we patented and copyrighted, we built it into our transactional processes. So now South Africans can own 1/10,000th of a share, which solved many problems for us. The first problem was obviously access and affordability. The second problem was portfolio diversification and mirroring. And specifically when we get into the wealth management space and being able to create portfolios, 100 Rand portfolios that mimic the portfolios of $1 million Rand investors, this was a key component that we needed to address. It's tangibly executable in a product that we call baskets, because not everyone knows what to buy. So we created a platform that's really easy to engages the consumer and allows them to buy their shares. But what happens if I don't know what to buy? We learned a little from Amazon. We do their stuff. Clients who bought these shares also buy those. So we get the consumer to focus on his first purchase engagement. What's the one share that you want to own? And from that, we start a journey that leads you to 15, 16 stocks. You'll be surprised how good those portfolios are, and you'll be surprised how much information is in that first choice. And I can tell you now that if I showed these portfolios to the asset managers in the room, they'd be embarrassed and they'd be overwhelmed by what these retail clients are doing for themselves. The other product that we've got is baskets and bundles. Baskets and bundles won an innovation award yesterday at Accenture, so we're quite proud about that. But what is it? Specifically, it is a risk. It's a risk measured portfolio. That's what the number is. And we've integrated another fintech leader out of the US called Riskalyze. And we risk assess the portfolios, we give them a risk number, we contrast that risk number to the client's risk number, and then we match those two things. And so based on your risk number, these are the portfolios of shares, or baskets or bundles of shares that you should buy. As opposed to buying a single share, the transaction point, you still put your 100 Rand in, it then allocates those transactions according to the weightings of the asset manager into your portfolio. And you get transparent, direct access to the underlying holdings. We like transparency. Why? Because it increases engagement, and engagement increases positive user behavior. The asset management industry doesn't like transparency because it doesn't want engagement, because when they don't do well, they don't want you to take your money out. And so these are uncomfortable things for the industry to address, but we're getting asset managers. People said that we wouldn't get asset managers to join us. We're less than 2 years old, and the first asset managers that aren't owned by us, this one on the screen is ours, are launching next month. And so the move is happening naturally. It doesn't stop there, we're just getting started. We've got products that are coming to market fairly soon. The ones that we've already talked about, so accessing shares and baskets and bundles are up, but we're putting wrappers around it so that we can have tax-effective structures. We've already got South Africa's best tax-free savings account. We're putting RAs and umbrella structures, so pension funds and life products. We put recurring investments in 2 months ago. Recurring investment is just a fancy name for a debit order. Take 100 Rand, allocate it to whatever investments you like. 10 shares, 5 shares, a basket of shares. Set it to go off monthly, quarterly, or annually, and the system looks after it on your own. If you at any point, 3 days to the execution of that debit order, you can modify, amend, increase, remove. We're partnering with corporates. Our strategy is 50% to grow it alone, use our marketing money and muscle, and our marketing currency is customers. They are 44% of business comes as a result of referral business. The other part of our strategy is with partners. Satrix now is a great example of that. We partner with them to create an extraordinary ETF platform that takes all the benefits of what we do and applies it to all the benefits that they do. For me, that's how fintech gets exponential growth, through partnering good platforms and ideas and delivering better products and services as a result. Other things that are worth noting, just is it winning? Are we making an impact? So remember the number, 280,000. We've opened 40,000 accounts in under 2 years. 22,000 of them have gone on to fund and invest. 9,782 are engaged investors, which means that they've gone on to make at least 10 investments and 3 deposits. We've done 8.3 million. We've had 8.3 million logins. The engagement level of people accessing their portfolios is off the charts. On average, the customers log in every 3 days. That's extraordinary for a financial services company. We model the business on the basis that they would come weekly. They're coming daily. 702,000 transactions, 902 million Rand invested in the platform or on the platform. We've saved our consumers, our clients, 42 million Rand in under 2 years. That's around 5% of their portfolio value. Compound that over 30 years, and if you can do the numbers in your head, you're a genius. 0 to 92 is our client ages. We're cheating with 0. Obviously, parents are taking advantage of the structure and investing for their kids, which is very lacquer. We're most proud about the fact that the median age is 32, and so we're addressing the millennial opportunity, which is the one I think everyone's trying to solve. 70% male, 30% female. We're working really hard at increasing those numbers to 50-50. 4,585 clients under the age of 21 investing an average of 12,000 Rand. That's where the real wealth creation will happen. Unfortunately, I probably won't be around to see it, but the stories of 12-year-old kids running their own portfolios on their own, making decisions for themselves, will make your eyes water. Our best marketing is you, our customers, 44% of our business. And that's me. I've got a final video just to play off to just give you a taste, because we're not like any other stockbroker. If you think of us like a stockbroker, you're thinking of us in the wrong way. So I thought a little video to give you a taste of what we look like.